Once again, switching topics, we have our president here once again, Justin Halverson. He'll go a little bit more in depth of his article in FOMO Investing. Hey, Justin.
Hey Jake, it's exciting to be here and see the first episode of the Spartan Journal podcast, man. I'm excited to watch this go to the moon as it's going around. So FOMO investing, I know this is something I wrote last week for our editorial. I wanted to start with doing a little quote here from Warren Buffett. It's kind of a infamous story. Now, a few years ago, he was asked on a interview if he thought there was going to be a financial crisis sometime in the future, and he responded, well, there will be one sometime. People start being interested in something because it's going up, not because they understand it or anything else. But the guy next door who is dumber than they are is getting rich and they aren't. And their spouse is saying, you can't figure it out. It's so contagious. So that's a permanent part of the system. So what is that? That's FOMO investing right there. Over the long term, markets are efficient, but in the short term, we see that there's a lot of inefficiencies. We see that certain companies' stock prices don't reflect their financial fundamentals. But over the long term, markets tend to even that out. Another quick infamous story comes from JFK's father, who was a stockbroker in the roaring 1920s, toward the end of the 20s and toward the beginning of the Great Depression when the stock market crashed. He was getting a shoe shined, and a shoe shine boy offered him an unsolicited stock tip to buy Hindenburg. JFK's father went home and decided to sell all his stocks the next day, and not only that, short the market, and he made millions when the market crashed. So who are the shoe shine boys today? I don't think we're close to a market crash or anything like that, but I like that story a lot because there seems to be a lot of people nowadays who are all of a sudden Wall Street experts who don't seem to ever looked at any financial reports before. It's very interesting. So what I'd end there with, Jake, is like FOMO investing. Past performance does not guarantee future results. So are you interested in something just because it's in the news, or are you going to be interested in it in 5 years and 10 years when you want to watch that grow? So.
Right. Do you see FOMO investing lasting, or is it a new topic, do you think?
I mean, it probably comes and goes. I don't like the word bubble's thrown around a lot, and like that's kind of an overused word. I think people will always be interested in something when they have missed the upward trajectory, right? Like if you look around and you're like, wow, this thing grew 100% or 300% in a week. Why didn't I buy that when it was $4 a share? Because you can't help but feeling stupid. Like, I mean, I feel a little stupid. I'm like, oh, I could have bought a bunch of GameStop for $4 a share and made money. But like hindsight's always 2020, right? So I'm sure it's always here to stay. We're seeing a lot more of it though, but I don't know. Who knows?